Oh, hi everyone. This is Devins Financial Weekly Stock Analysis Newsletter. Today is May 3rd, 2015. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. US stock market uptrend is under pressure. Many leading stocks broke down. And all my previous long positions were stopped out. And also the stock index ETFs were also stopped out. I'm currently long the oil ETF. I did buy a couple new breakouts, but with a very small position. Let's take a look at the market indices and the charts. First is the German DAX index. It broke down 50-day moving average, and this is the first time for a while since last November, and the market entered the strong uptrend, but now it broke down. This is a bad sign for the not only for the German index. German is the biggest, one of the biggest producer in the world. So this is indicating of the world stocks. All the world stock is not doing very well right now. U.S. Nasdaq index, although it rebounded on Friday above 50-day moving average, but on the down days, volume is much higher when they rebound. So institution overall is selling into this stock. That's not a very good sign. So the risk is higher right now when long the stock. Mid cap also break down 50-day moving average. It closed down below 50-day for Thursday and Friday. On the down days, volume is really high. Small cap did the same. This is worse than the big cap. Big cap SP 500 actually closed above 50-day moving average. It's get helped by the energy sector. However, look at the volume. On the down days, volume is much higher on the up days. So again, another sign institution is selling into this market. Gold price came down again. Silver price in a downtrend. Gold mining stock ETF right now is in a short-term uptrend. It's supported around $20. US dollar broke down 50-day moving average. This broke down a long-term trend that's been lasted for a while. So this trend is broken. It made a lower high and now it's broke the previous support at 96. Dollar is coming down. Crude oil has bottomed out. So it made a bottom here. Now it's going uptrend. So crude oil seems like it's already reversed the downtrend. It's now in an uptrend. Shanghai Stock Exchange Index. China stock is still very strong. Right now it's in the uptrend. Those are China ETF, ASHS, CNXT, another China ETF. FXI, another China ETF. YIN is 3 times of China ETF. All those are in the uptrend. US real estate ETF, this is a very ugly topping pattern. So right now this is not a good ETF to be long. Copper price jump up. So the commodity seems is turning the corner now. Mortgage bond price, this is still in the uptrend. So, but looks like it might be topping here. Mortgage interest rate is on the reverse of the bond price. So interest rate right now is low, but it may turn up. Semiconductor is in the uptrend. Social media network ETF, it broke down. This is a turning point. It seems like a breaking down. Solar stock ETF is in uptrend, but this is not very good. It seems breaking down 20 and 30-day moving average. We have to see if it can hold about 50-day moving average. USO is tied with the crude oil price. This is the ETF. USO is going up. It's in the uptrend. XLE is a energy sector stock ETF, also in the uptrend. Financial sector ETF is in the consolidating, is moving sideways. Let's take a look at the list of stocks. And the two stocks are still in the uptrend, but they're too extended to buy. This is the previous two stocks, Umbrella and Palo Alto Network. And then this is a list of stocks that broke out, but they're still in the buy range. AYI, Apple, MLM, Monster Beverage, MNST, Data, and Alta. And then there's a list of stocks that previously they were strong, but right now they're in trouble. Twitter, LinkedIn, Grubhub, GRUP, IPGP, and Harman International, HAR, and Facebook. All those stocks has a very ugly chart right now. They have turned from a strong good stock into a bad stock. Let's take a look at the first list. Those are the two stocks that's still very strong, but they're too extended to buy. Umbrella is going uptrend. Palo Alto Networks is a nice uptrend. Second list are the stocks that's broke out, but they're still within buy point. Apple broke out right here, but immediately after broke out, it pulled back. This pullback is concerning. The volume is too high on the reverse down. So if you haven't bought it, you may want to wait and see what it's going to do next. If you have bought it, this Thursday's low can be used as a stop order. If it continues to stay below 50-day moving average, that's not a good sign. AYI, this one is still hold up very well, and it's in the uptrend. Recent breakout is right here, and may have another breakout from this flat base. Data is a Tableau software, and broke out right here. It's within the buy range. MLM, this is a new stock. I bought this one, and it's a high volume breakout this flat base, and this is a nice breakout. Monster Beverage broke out on this day, breakout $144, but immediately fall back because of market. However, it holds about 50-day moving average, so it's still a valid breakout. Alta Salon, this one broke out on this Monday. Oh, actually, it's the last Friday it broke out here, but it pulled back because of the general market. It's still holding above 50-day moving average. There's no institution selling signal, so this stock is still a hold, assuming you bought it on last Friday's breakout. Fourth list are the stocks that's in trouble. Facebook, and this has not break down significantly. However, look at this day, it reversed on the downside. Volume is very high, and now it's keep coming down below 50-day moving average. So it might be in trouble. This is not a hold. If you have it, just sell those stocks. Grubhub broke down here. This is a 50-day moving average. It should have been a stop price if you had it. Right now it just closed below 50-day, and it's a very bad close down. It's a breaking down. Harman International broke down here, gap down, and the stop order cannot protect you from the gap down, but it will keep you out of the trouble. Most of the stock gap down like this, they just continue to go down, and they just can't just bounce back up. And this is a high volume gap down. That means institution sold the stock. When the stock lost institution support, and they cannot go up. IPGP, this is another stock has a trouble, and this just came down and below 50-day moving average. LinkedIn gap down due to bad earning, and the volume is really high. That's a trouble sign. And the in the in the near future, most likely we just continue come down. Twitter, very bad breakdown here, and just broke down. Those are all the trouble stocks and not to be held. Those stocks need to be sold. What to do in current market? First thing is to get out the stocks that are in trouble, and then reduce the long position. It's perfectly okay to stay out completely, as the index is suffering from a large number of distribution days. So it's, if you just decided to take all the money off the table and stay in cash, that's perfectly fine. That's all for this week. See you next week.